Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short, or at least some that are worth keeping an eye on. I will use real-time queue systems to find that out. How important is conviction in trading profitably? It is super important. I interact with many traders from around the globe regularly. I share with them and I learn about their trading techniques. We do not trade in the same way. When I find a technique that others use successfully and consistently, I cannot incorporate it immediately in my trading. It needs conviction and that takes time. It needs time but not a lot of time, provided I make a concerted effort to observe it first, then try it out and see how it works in my hands. Once I find that it works well in my hands, meaning it adds to my profit, I have the conviction to include it in my trading techniques. Only trying it out and repeated practice brings that conviction. That happened to me concerning several techniques and tools that were not my invention or original coding. Bucket analysis was one such tool. The use of the 3-month new high-low indicator was another. I learned about them from Dr. Jeffrey Scott's videos. It seemed to make sense and I sincerely tried them out. Once I tried it out, it worked for me. Now I use them as my own. I use them well. I use them profitably. The process of arriving at conviction was different for the tools and techniques I developed. The Q trade setups, checklists, the idea of using technical breadth, accumulation distribution count, etc. Those were developed over many years with trial and error and real money trading. What did not add to my profit, I eliminated. What resulted in a consistent profit, I fine-tuned. The result is Q as of today. I use it without second guessing. Whatever the systems and techniques you use, if you are not convinced about that and your ability to follow it, you may not adhere to it. That would result in random trades and inconsistent results. That would feed the non-conviction even more, leading to more random trades and so on. The vicious cycle may go on and on. On the other hand, once you find a system that is known to work and you have conviction in it, you will find yourself sticking to it. That is likely going to result in profit over time, which would further feed the conviction. The virtuous cycle will continue. That is why conviction is of utmost importance once you find a reliable system and technique. And no one can stop you from developing that conviction. All it needs is a bit of practice and discipline. Q diary or an honest trading log can help you if you are new to the tools and techniques. Log the trades, see how they work, and keep the parts aligned to your style. Trend following versus reversing trades, growth stock versus value stocks, long trades versus short trades, etc. Eliminate what you do not need. Make the outcome your own. Trade profitably and consistently ever after. I know you can do it. Greetings. I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and global markets using only one trading system, Q, that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis, always before knowing the results, on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I'll use several of them today. Let's start with a look at dollar index. Dollar index created a false upside breakout in the weekly chart. After that, this week, it went back above the watermark resistance. Will it come down next week? We'll keep an eye on that. In the daily, after creating the false breakout, it went up, but on Friday, it has a bearish indecision. That may point to the price going down. It's not a trade setup, but it is possible that price will go down, which will happen from a level where the bearish headwind came earlier. However, even if it comes down, it will have robust support from the trend line as well as yellow direction line, which may prevent it from going down a lot. That is why I have no preferred trading direction based on dollar index at present. Also, next Wednesday's Fed rate decision may decide the next leg of dollar index. I would probably rather wait for that before deciding dollar index's direction and probably my preferred trading direction overall as well. But I will come to that conclusion or not based on the entire market analysis, which I will continue. Other than dollar index, the instrument that I look at every day, share it in every market recap to see how market may be influenced, is the mega cap index. Mega cap index went up again this week. However, the weekly candle is not as bullish in shape as in the previous week. More important than that, in the daily, we have a cluster of bearish indecision. One is important, cluster is to be taken more seriously. It's not a bearish setup, but it is likely that price will stall here or it may pull back. Not a trade setup though, but I keep an eye on the next move with a bearish inclination based on this. If it pulls back, the trend line support and the yellow direction line both are far away. It will give plenty of opportunities to take short trades. And of course, it is super overbought. It's not a time to buy in any way. Now, Megacap has multiple stocks. Though Megacap index went up, not every stock went up. Some stocks are weaker than others in Megacap, and one is Nvidia that I shared earlier. I repeatedly shared my bearish view on Nvidia for several weeks. Let's study the charts. In weekly, it created a false upside breakout. Backdrop color is bearish, that is bearish for 4 weeks in a row, and it even broke the trend line support in weekly. Contrast that with the Megacap index as a whole, which made a new all-time high. And what is Nvidia? Nvidia is or was the dearest stock, the darling of Wall Street, darling of everybody. But it is not acting as a leader anymore. And I could anticipate that. I shared that and I traded that profitably. And even now I have a bearish position in Nvidia. In daily, it is inside a triangle pattern. On Friday, while the mega caps rallied some more than others, Nvidia created a reversal candle at price extreme high. It is inside a triangle, but looking at the reversal candle in daily, looking at the breakdown of trend line support in weekly, I am anticipating that it has higher probability of going down than going up. I am continuing to hold a bearish position in Nvidia. Q market breadth invaluable in assessing the internal health of the market and anticipating a change in market direction. Anticipating a change in market direction. This is how I use the market breadth charts to do that. This is how I shorted several instruments. Nvidia was one of them. This is how I shared only bearish trading ideas in the previous week. Firstly, let's look at the 3-month new high low. Works like a clockwork. This is the one that I picked up from Dr. Jeffrey's videos among other techniques. Every time it hits the upper extreme threshold, it pulls back. What pulls back? The indicator pulls back. Does it mean that the candle chart pulls back? No. The 3-month new high low pulls back, and therefore it is possible to look for overbought stocks at the point of extreme overbought condition in this indicator and look to short them as reversal trades. Works like a clockwork, work again. The bearish divergence is continuing very much across the board in terms of percentage of stocks above 50-day moving average, in terms of advanced decline and up down volume. This is what I have been showing for several weeks now. This is what allowed me to confidently take shorts, which was probably contrarian trade, contrary to the overall market direction, but those turned out to be profitable decisions. This week, we once again have 3 Hindenburgs in 5 trading days. That is also a reason that I am not willing to buy a lot. I have stopped buying as of now. I have short position, bearish positions, but I have no long position for swing trading that I am holding. Now notice also that the 3-month new high low is coming close to the extreme oversold condition, but it is not there yet. What will be the time to buy for me? It should hit the oversold condition and then tick up. It will take at least a few more days, maybe more, for that to happen. So it is not allowing me to consider buying in any way. This is USA market breadth total view, the broadest view of the market. Let me drill down to Nasdaq and NYSE. Once again, the 3-month new high low worked and they are getting close to being oversold. From overbought, it is coming to oversold condition. Bearish divergence is continuing across the board for both Nasdaq and NYSE, and the Hindenburgs confirmed ones came from both NYSE and Nasdaq. Does not allow me to buy. If anything, allows me to short. And if we look at the major indexes, I'll be like a broken record. The same thing is there across the board. Bearish divergence, advanced decline, up down volume. This is for Dow Jones Industrials. 3-month new high low worked at the upper extreme threshold, nearing the lower extreme threshold, but not there yet. Same is true for Nasdaq, but to a lesser extent. Less bearish divergence, less close to being oversold. Other than Nasdaq 100, Russell 2000, same. S&P 1500, same. S&P 500, same. That was internal market view. What is the market external view? I see a question on when did you enter short on Nvidia. I think that is not the way to, at least I don't want to make these YouTube videos to focus on that. My intention is to share a technique exactly when to enter. That answer is there in the masterclass videos. I don't want to go through that. When the trade setup is there, when you can use daily weekly chart, when you can use precision entry chart, that is something you can learn from the masterclass videos. They are open to the public, and then you can adapt it to your own style. What is most important in my view is to have a good understanding of the market, where the market is going. If it is bullish, look for strong industries. Bearish, look for weak industries. Then further look for strong or weak fundamentals, as the case may be. And then lastly, look for trade setups. Exactly when you enter will be just one part of that whole trading technique. That is what I try to explain. I would not like to go into exactly when I enter a trade or exit a trade, other than the ones I share myself. I did tweet and showed in last videos my bearish view on Nvidia. That is all I may say. Let's look at the market ETFs now. This is market's external view. All the market ETFs using weekly interval, 3 of them went down. Only QQQ went up. That is not a bullish market. QQQ is mostly influenced by mega caps, so it went up most likely because of mega caps. And notice DIA and IWM, they are now down for 3 weeks in a row. For 3-week period, 2-week period, 1-week period, they are now down. If you watched them, you could also short them, probably using short call verticals, and could hold a profitable position in them. I have bearish position in DIA and IWM as well. Now, did QQQ really go up because of the mega caps? The answer is an unambiguous yes. These are the mega caps along with the market ETFs. The usual mega caps, and I have added AVGO to the list because AVGO hit 1 trillion market cap last week. Notice how much some of the mega caps went up by huge percentages, some more than others, notably Tesla and AVGO. And then look at the percentage by which QQQ went up, just 0.77%. I will also show later that indeed if the mega caps did not go up, QQQ would have come down considerably. Notice that several mega caps did not go up, and the worst performer is Nvidia. And not only for this week, Nvidia is now down for period 9, that is 9-week period, to all the way to 1 week period. So it is consistently coming down. And I shared my bearish view on Nvidia. I did share about taking the short trade and closing it earlier, and I have again a bearish position in Nvidia. I am in no hurry to close it. This is the worst performer of the mega caps. Why will I be in a hurry to close that trade? Now look at QQQ. The weekly candle is looking very similar to the mega caps. The daily candle, last few candles, are looking very similar to mega caps, as if what the mega caps are doing, mega cap custom index, QQQ is doing the same. We did have one bearish headwind on Thursday and bearish indecision on Friday. However, there is one trend line support nearby. If that breaks, though there are other trend lines below, I think we'll have some or other mega caps to short, either using daily time frame or at least using the precision entry techniques. So I will keep an eye on that. We also had bear release 2 times in the current week, but there is of course no short setup. Now I mentioned that if not for the mega caps, QQQ would probably be down. This is a comparison of QQQ daily with equal weighted QQQ also daily. QQQ is still going up, strong uptrend. The trend line that is close to price has a slope more than 55-degree, very strong uptrend. Whereas equal weighted QQQ displayed a cluster of bearish headwind, and now it is not going up. If anything, the traffic momentum color has turned bearish. It is not giving a bearish setup, but it is not looking as bullish as QQQ. Now these are the two daily intervals. Did the equal weighted QQQ, that is QQQE, go up for the week? This is QQQE with weekly interval. It did not go up. Worse, it had a bear release signal, and even more worse than that in my view, at price extreme high, it created a reversal candle. And interestingly, if you look for longer period, QQQE is actually underperforming the market. This is something that surprised me a little bit. I was expecting QQQE to be weaker than QQQ, but I was not expecting that QQQE to be even weaker than the market, that is S&P 500. So under the hood, the technology stocks are actually not so strong, barring a few mega caps. That is what I conclude from this series of charts. SPY also heavily influenced by mega caps but less than QQQ. In the weekly, it did not create a new all-time high. In the weekly, it does not have a bullish color. It has a neutral color, not bearish, but neutral color, and it is a bear release signal. In daily, for this week, it is moving sideways, and momentum color has turned bearish. It does not have any short setup by any means, but it has turned bearish in color, and the trend line support is far away. If it tilts down from here, I am not going to short SPY, but I am going to look into the constituent stocks using Q index and look for weak fundamental stocks in weak industries with low risk short setups. SPY itself is of course not bearish for shorting, but it is neither bullish as well. And that is where the distinction I make between an instrument that is uptrending or downtrending and between my preferred trading direction. This is clearly uptrending. QQQ was very much uptrending. SPY is also very much uptrending. But that does not mean my preferred trading direction cannot change to bearish. If it starts to go down next week, I'll be happy to take bearish trades based on SPY charts as well. Now, one thing to note, if I go back, if you look at the activity pattern for the 5 trading days in last week, it went down for 4 days, red color bars. Only one day it went up. That is not bullish, isn't it? For 4 days it went up, and the volume bars are more or less of similar height. That is showing selling. Now, one day it went up. Could we anticipate that? Actually, yes. And if you look at the trend line supports, the one day it went up happened right after price closed above the support. It was a trend line bounce, and these memory trend lines work remarkably well. I use them all the time. That seems to be the reason price went up one day. However, after that, it came down and broke the trend line support again. That is not bullish. In fact, if you look at Friday's candle, it could be considered as a breakdown short setup, except that it has an up, it has one lower tail. If the lower tail was not there, using Q guidelines, I could short SPY on Friday itself, but the lower tail is there. So one technique could be to observe how it is moving next week, and if it is going down, we could use the precision entry techniques to enter a short trade. But I don't always like to trade the ETFs. I have the tools to drill down in the weakest stocks in weak industries within SPY and trade that in the bearish direction. But it was nice to see that the bounce happened right from the memory support, and it is concerning to see that same memory support is now broken. If you look at SPY versus the equal weighted S&P 500, looking very different, isn't it? SPY we saw was moving sideways in daily, though the momentum color has turned bearish, and contrast that with the equal weighted. The bearish headwind and the cluster of bearish indecisions came near end of November. Since then, price is going down, steadily going down. Once again, the bearish headwind worked remarkably well. It has steadily come down, and where did it stop? Stopped right at the trend line supports, very much underperforming SPY. This is showing that for several weeks, not several days, for several weeks, under the hood, market is steadily coming down, and with volume that is non-negligible. Not very high also, Not super high, but it is not super low as well. But now it is right at the trend line support. So that is not a point I would like to short. I would have shorted earlier if I was looking at this instrument using the bearish headwind signal. If that gave a trade setup also, if it did not give a trade setup, then the Q guidelines is to look for a shorting opportunity in the first bearish flow candle followed by the bearish headwind signal. Not looking bullish if we eliminate the mega caps, if we look at the equal weighted SPY, isn't it? Dia, worse than SPY, worse than QQQ in that the weekly has turned bearish in color, not even neutral. The neutral color came 1 week ago. Once again in daily, the bearish headwind worked remarkably well, catching almost the very high of the move. And this is one instrument that went down for all the days in the week. In fact, it is down for 7 days in a row. And according to a report I saw, that has not happened for several years. Of course, it is still in an uptrend, but using the bearish headwind or using the first bearish flow after the bearish headwind, you could consider taking a short trade. And I have a short trade in Dia as well. It has trend line support some distance away. If it comes through the support and bounces up, I will look to book at least partial profit. That is the standard guideline. That is what I try to do. Book profit quickly, at least partial profit to make the trade almost guaranteed risk free from that point onwards. IWM also looking weak, reversed after displaying the bearish indecision and bear release signal. Backdrop color is already bearish. In daily, after the bearish indecision cluster, I always take it seriously. It created a false upside breakout, which I mentioned at that point, saying that that was a possible shorting time. Then it gave bearish flow and it has continued to move down. Once again, if you look at the activity bars for 5 days of this week, it went down for 4 days, went up for only 1 day. That is also bearish. Steadily coming down. The daily momentum color is bearish for 7 days in a row. Trend line support is far away, but the yellow direction line support is somewhat below. Now, a few days move down from here. We'll see if the yellow direction line holds. Then I may book at least partial profit in the short position that I am holding. Now, for 1 day, IWM went up this week. Why? Once again, that up move happened right at the trend line support. Unfortunately or fortunately, depending on whether you have a bullish or bearish position, I have bearish position, so fortunately for me, nothing to do with luck. In fact, I traded it based on robust signals. It broke below the trend line support. That is making IWM bearish. Bucket analysis and sector industry stock breadth using Q edge helps to decide preferred trading direction that may be different from the current market trend. Again, review of something that I shared last week and then see how it is playing out. Remember, I talked about conviction. This is what gives one conviction to try it out, see if it is overall giving profit. If it does, then only you can build conviction, not based on somebody else's video. You have to try it out. Of course, the videos help. I think my videos help because Not because they are mine, but because I shared the results, shared the ideas before knowing the results. This is what I shared last week. The summary that I told after sharing this last week's snapshot was this. This is exactly what I said. Allows shorting. This was last week. I said allows shorting last week. Notice, let's go back. Notice a few things. Last week I said allows shorting. Percentage of stocks above mid Bollinger Band was 51%. And notice the distribution of stocks across the buckets. You may look at the Friday's performance, but that will not be enough. We'll look at the 1 month to 1 day performance. So as far as this snapshot is concerned, look at last week's percentage of stocks above mid Bollinger Band, 51%, and try to keep in mind this shape of the bucket distribution. I said allow shorting, and what happened this week? From 51%, the percentage of stocks below mid Bollinger, not above, below mid Bollinger Band, from 51% it went up to 67%. And notice the distribution of the stock across buckets decidedly shifted to the left. So the short comment allows shorting turned out to be profitable. Also, last week I shared the sector industry stock breadth from 1 month, 10 days to 5 days to 2 day to 1 day period. And again I made this short comment allows shorting. You may keep this snapshot in mind. This is what I shared in last week market recap, and this is how it is today. That allows shorting comment proved to be very valuable, aka profitable. Now from 1 month to 1 day, everything is bearish, turning more and more bearish from longer term period to 1 day period. There is nothing that tells that that comment need to change. Allows shorting is the comment I will continue to have. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Again, last week. It's fun, isn't it? For me, it is. This is what I shared last week. And again, with this weekly technical breadth, I made this short comment. The video is, of course, on the YouTube channel you may review. I said allow shorting. I did that based on the categories, all of them being bearish, but also, and I mentioned this specifically also because of the headwind alert coming, bearish alert. Last week, right? Overall, 72% weekly bearish. Today, 89% overall bearish. All the categories had turned more bearish. Last week's short comment allows shorting turned out to be quite profitable once again. It's fun and it is profitable for me. Of course, this Friday's signals are also overall bearish. Reversals are more bullish in percentage, but absolute number of reversals on bullish side is quite small. So overall, daily technical breadth is also bearish. I like to keep the same comment as last week based on technical breadth too allows shorting. Simple short. Market level summary then. QQQ is strong and overbought. Sooner or later, probably sooner, it will reverse. We don't know exactly when. You may keep an eye on that. I will too. That may give lucrative shorting opportunities. The rest of the market is weak. Some are nearing oversold condition in terms of 3-month new high low, but not in terms of bucket analysis, nowhere close to that, only in terms of 3-month new high low. So some are nearing oversold condition, though not there yet. It is not a time to buy by any analysis. My market view remains bearish overall due to the Fed rate decision next Wednesday. I prefer to wait for now and not initiate new trades. Now, one thing I would like to highlight, you may know that already if you are watching my videos regularly, but it's worth repeating some things sometimes. Some signals are nearing oversold condition. Only one, right? 3-month new high low. Firstly, it is not there yet, but that is not telling the full story. Remember how 3-month new high low works. If it hits the overbought condition, it pulls back, but does not mean the candle chart, that is the market, pulls back. It means the 3-month new high low plot pulls back, meaning some stocks may be pulling back from top, or some stocks that are already down going down further. That is how this indicator works. So even if it hits extreme oversold situation, that does not mean the market needs to go up. Yes, some stocks may recover, but not necessarily the market. That is what we saw in today's charts also. 3-month new high low pulled back from extreme overbought condition, but the candle charts did not. So not necessarily the market would reverse up as a whole, even if 3-month new high low hits oversold condition. That is different from bucket analysis. And if bucket analysis reaches extreme oversold condition, we may more confidently take buy trades from where? From the list of stocks that are below lower Bollinger Band. Of course, I will also look for weak fundamental stocks in weak industries, but bucket analysis that way more immediately and more confidently actionable than 3-month new high low in terms of predicting next market move. Both can be used to take reversal trades, but one is more predictive of the next market move. Which one? That is bucket analysis. So those are few details you probably already know, but no harm mentioning that, and I mentioned that because I specifically mentioned one indicator nearing oversold but not the other. Review of last week's trade ideas. I shared only one trade idea that was bearish, that was AGRO, and it did go down. Let's look at the stock using Q Elite. I shared the bearish idea on this day 1 week ago. That was a flow trend following short setup, and I chose this one over some other stocks based on 360 degrees analysis. It did try to go up little bit but then reversed again, and now it has broken the trend line support. It is similar to IWM, tried to go up, not exactly matching the pattern of IWM, but it did try to go up and now broke below trend line support, and the weekly candle is looking even more bearish because it created a reversal candle. So if you shorted the trade, you are still in the trade, did not hit the profit target, which would be at least the distance, that is the risk distance, did not hit that, did not hit stop as well. And when I mentioned about stop, let me go to the protection chart. This protection signal keeps stop safe distance away. Short entry was suggested on this day. Stop would be based on the protection signal that was never hit, so one would continue to be in the trade. That is if using stocks. If somebody used short call vertical, of course there is no need to put stops. That is one thing I like more about using verticals than using stocks. But of course every stock does not have liquid options, so I'm comfortable and used to trade stocks as well, as verticals both in long and short directions. So only one trading idea that I shared in the last market recap gave a small profit still in the trade if you took that. This week's trade ideas. Due to the impending Fed rate decision on the coming Wednesday, I would not like to initiate new trades for now. I have several bearish trades, I mentioned that already. I may watch the Fed rate's impact on the market and decide on the next trades. Having said that, I would like to share a stock that may be worth watching, not as a trading idea, that is very different from a stock worth watching. Trading idea is something I can act on immediately, but this is the kind of stock I would not mind keeping in my watch list. What is that stock? That is a stock like Coles. Why so? Let's look at Coles, KSS, Coal scorecard using Vital First. What caught my attention was this huge dividend yield of 13.94%, almost 14%, undervalued stock with a short squeeze potential that is very attractive or can be very attractive in a stock that is so close to 52-week low. Only 3% above 52-week low with a short squeeze potential can turn out to be a lucrative buying opportunity, and insiders are actually buying. Now, why I chose this stock is because also of the Fed rate decision. We don't know how Fed rate decision will impact the market, but it may move the dividend yield, high dividend yield stocks in a particular manner. We don't know which way, but if it affects the high dividend yield stocks bullishly, then KSS may be a nice buying idea because also it has a short squeeze potential. And though the growth is coming down, it is still a profitable company. Whichever way you look at it, at its EPS, last 12 months, last quarter, last year, all are positive. That allows me to buy the stock. And if I look at its edge scorecard, it's in a industry that is not only one of the strongest, but also one of the most accelerating. That is an industry I would like to buy in, turnaround industry, as I say. And not only relatively speaking it was up by a large percentage, you may say 1%. And lastly, looking at its technical charts, Coles, KSS, it does not have a trade setup yet. That's why I am not suggesting it in any way as a buy idea, but it has some pattern I like for adding to my watch list. It is at jump thrust low at price extreme low. It has a bullish headwind in daily. It has a trend line resistance in daily as well. If it can go above the trend line resistance, it may give a breakout long setup. The risk will be quite narrow. I may keep an eye on it for that reason, and also as I mentioned, the Fed rate decision may positively impact high dividend yield stocks. If that happens, KSS will be an even stronger buy candidate. The dividend itself, if it is sustainable, even if half of that is sustainable, instead of 14%, 7% dividend yield, that may itself be a reason to buy a stock for those who are willing to hold the stock for its dividend if required. Again, not a trade idea as of today, but the dividend yield and the Fed rate decision made it worth for me to notice this stock. If you carry out the Q 360 degrees analysis like that, you will most likely find other trading candidates today. And notice interestingly, though my market view is bearish, the stock I shared is with a bullish inclination to be added to watch list. That is how I am sometimes ahead of many other people in changing direction in terms of trading direction. But it's not a buy candidate yet for me. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next market recap, most likely next week. We'll see. Have a great weekend, and as I always say, as these live examples I am confident shows, there is no reason not to do that. Trade profitably. Thank you.